In this video, you're going to learn about the best all-in-one ETF portfolios in Canada and whether or not you should buy them. Hey, what's going on? It's Chris here from Wealth Awesome. Today we're going to talk about all-in-one ETFs. All-in-one ETFs were created with two main purposes in mind. The first is the ultimate ease and convenience in building an ETF portfolio and ETF investing. And the second is to lower fees for Canadians. So Vanguard had led the charge by becoming the first company in Canada to introduce the offering of all-in-one exchange traded funds, or ETFs, back in 2018. They're otherwise known as portfolio ETFs. And as more ETF providers like iShares, BMO, and Horizons entered the market with these all-in-one ETFs, sales started to explode for these in Canada. And the increasing demand for these all-in-one ETFs should not come as a surprise. Mutual fund products in Canada are some of the most expensive in the developed world, and ETFs are leading the charge in reducing fees for investors. So what exactly is an all-in-one ETF? They are created as a fund of funds. All-in-one ETFs are built using several ETFs and usually give worldwide diversification. They are much simpler to use, and you won't have to rebalance it, as the portfolio will rebalance automatically to your desired equity and fixed income split. Before all-in-one ETFs came around, it was a bit harder to make an ETF portfolio. You had to buy several single ETFs, and you would have to rebalance them at times to suit your risk tolerance. So these all-in-one ETF portfolios are, in my opinion, the easiest way to invest in ETFs, other than maybe robo-advisors. So the top ETF providers for all-in-one ETFs, there's four main ones here. And you can see it in the table here on the screen. So you got Vanguard, which offers 6 different ETFs. You have iShares, which offers 5 different all-in-one ETFs. BMO, that offers 3 different ones. And Horizons, which offers 3 as well. So now that we have the best providers, let's dive a bit deeper into these model ETF portfolios. So make sure you stick around until after the list, and I'll go over how to pick the right all-in-one ETF for you and which ones are my favorite companies. Also, if you get lost or want more detail, you can check out the written article about this video on my website, wealthawesome.com. I've included a link in the description. So the way I broke down these all-in-one ETF portfolios, I divided them by the different providers to give you a better idea of what each provider has to offer. And it's best to look at them by provider. So with Vanguard, they have the most offerings. You're guaranteed to find something that's suited to whatever your needs are. Vanguard's asset allocation ETFs were designed by the provider in its efforts to pioneer the simplification of investing, while still managing risk through global diversification and balance. Each of the 5 ETF portfolios are all-in-one ETFs that invest in various mixtures of several core Vanguard ETFs. Each of these portfolios is balanced regularly to maintain the corresponding allocations and limit the risk levels within the determined risk tolerance to help investors remain aligned with their goals. So there are 6 different ones, and the first one is the Vanguard Conservative Income ETF portfolio. I won't go too much into detail into this. I'll just list out the main points of it. It's an 80% fixed income and 20% equity split, and all of these ETFs have a 0.25% MER. The second one is their conservative ETF portfolio. This one is a 60% fixed income and 40% equity split. The third one is the Vanguard Balanced ETF portfolio, and this one is a 60% equity and 40% fixed income split. So the fourth one is the Vanguard Growth ETF portfolio, which is an 80% fixed income and 20% equity split. And the most aggressive one here is the Vanguard All Equity ETF portfolio, which is 100% equity and 0% fixed income. They also recently came out with something called the Vanguard Retirement Income ETF portfolio, and this is designed to give you lasting and reliable dividend yield in your retirement years. And this one is pretty simple at a 50-50 fixed income and equity split. All right, so the next provider that's up is iShares. So the iShares all-in-one ETFs are its model ETF products that it offers as an option for investors to help build a strong foundational portfolio. The ETFs are a selected group of ETFs and come in various combinations to help investors achieve a variety of different financial goals. The different mixtures of ETFs allow investors to capitalize on the all-in-one ETFs based on their risk tolerance. All right, so first up is their Core Equity ETF portfolio. This one has a 60% fixed income, 40% equity split. The next one is the iShares Core Growth ETF portfolio. And this one has a 20% fixed income and 80% equity split. All of these have a 0.2% MER, so it is slightly cheaper than Vanguard. The third one that it offers is called the Balanced ETF portfolio. So this one is a 40% income and 60% equity split. The next one they offer is the Conservative Balanced ETF portfolio. This one has an asset allocation of 60% fixed income and a 40% equity split. And the last one that they offered is the iShares Core Income Balanced ETF portfolio. And this one's pretty simple. It's an asset allocation of 80% fixed income and 20% equity split. I'm just touching briefly on these. If you want to learn more, of course, go into the website and you can check it out at wealthawesome.com. Third up, you've probably heard of this company. It's the Bank of Montreal, or BMO. And I feel of all the big banks, BMO has the best ETF offerings. So the Bank of Montreal was not going to be left behind the rest of the ETF providers. It's become one of the prominent all-in-one ETF providers in Canada, with the offering of 6 different all-in-one ETF portfolios that offer investors an affordable option to set and forget their capital for returns based on their risk tolerance and financial goals. First up is the BMO Conservative ETF portfolio, which is a 60% fixed income and 40% equity split. The next one is their Balanced portfolio, which is an asset allocation of 40% fixed income and 60% equity split. If you're looking for a little more growth, there's their BMO Growth ETF portfolio. And this one is a 20% fixed income and 80% equity split. You can check out all the rest of their offerings on their website. So the fourth company, you probably haven't heard of this one, or you might not have, is not as well known. It's called Horizons. And Horizons is the latest entry among providers offering all-in-one ETFs in Canada. They have a bit of a different structure. They have a unique swap-based structure of Horizons ETF portfolios, and this allows the provider to maintain a relatively low MER compared to the other 3 providers. It also offers 3 different ETF portfolios that combine various underlying ETFs to match investor risk tolerances and financial goals. Another unique aspect of Horizons is that it doesn't really charge a management fee per se, and the cost will be based on the MER of the underlying ETF. So first up is Horizons Conservative TRI ETF. Their MER is low at 0.18%, and you're looking at a 50-50 fixed income and equity split. Another ETF they provide is the Balanced TRI ETF portfolio, and this one is a 70% fixed income and 30% equity split at a 0.2% MER. With Horizons Growth and their third and final one, it's a little bit pricier at 0.28%, and this is their most aggressive one at 0% fixed income and 100% equity split. So now you're probably wondering, how do you use all these all-in-one ETFs? And it's extremely easy to use all-in-one ETFs. It is suitable for both beginners and experts. Here's a very basic overview of how it works. First, you have to figure out what type of asset mix is right for you. You can start by filling out an online questionnaire, such as the one that's provided by Vanguard for free. This will help you to determine your asset mix of fixed income to equity. So after you know your proper asset mix, all you have to do is find a suitable ETF from the list that I just provided. And you could purchase the ETF. That's the next step. You can use a platform such as Questrade or Wealthsimple Trade. The next step after that is pretty simple. You don't have to really do anything. You don't have to rebalance it, as the portfolio will automatically do so. So how to buy all-in-one ETFs portfolios in Canada? I've been using the discount broker Questrade for all my stock and ETF trading for the past 8 years. The platform is really easy to use, and the support has been outstanding so far. If you want to buy any of the all-in-one portfolios listed in this video, consider opening a free Questrade account. You could purchase ETFs for free also on the platform. There's a special offer for Wealth Awesome viewers, and there's a $50 free trade bonus when you sign up in the description below. All right, so when it comes to picking out the best all-in-one ETFs portfolios in Canada, each of the 4 providers offers various products to investors that they can consider. Vanguard is a pioneering provider that introduced all-in-one ETF portfolios to the Canadian market. Still, all these other providers are providing great products as well. Choosing the right portfolio becomes a matter of personal preference when it comes to your risk tolerance and financial goals. And it comes down, there's not a whole lot of variation in these providers. I personally am a big Vanguard fan. But I really love iShares as well. So for me, those are my top two choices. But I looked a lot into all of these, and really all of them, depending on where your asset mix is and where your goals are, you could find one that's suitable for you. I might try one in the future from Horizons or BMO. Alright, so since you made it this far, make sure you like and subscribe to the channel so you don't miss any content. I'll be putting out new stuff every week. Also, be sure to check out the blog wealthawesome.com. It goes into this topic in way more detail, and it's one of Canada's leading personal finance blogs. And as always, thanks for listening.